The Masters is the biggest golfing event of the year, and wherever there is a big sporting event, there's the opportunity to make money trading it. That is to place back bets and lay bets and profit regardless of the outcome. I don't religiously follow golf throughout the year. However, I have been watching the Masters since the year 2010, so I've got quite a lot of experience watching the tournament. But I have only in fact traded one golf tournament before this year's Masters, and that was in fact last year's Masters, where I made a relatively decent profit using quite small stakes. I did give my thoughts about trading golf in a video I uploaded to Patreon before the tournament started. I'll leave a link down below for more details if you want to access exclusive trading content whilst also supporting the channel financially. The Masters is a 4-day tournament, and over the 4 days I placed many back bets and lay bets. I'm not going to describe each one in detail, but I'm going to talk you through my process and show you some of the highlights. One thing that I knew straight away based off last year's tournament is that you definitely need trading software. The odds can move dramatically and quickly, and without a market overview screen, I don't think I'll be able to trade golf profitably and see the moves quickly enough in order to capitalise on them. As I mentioned, this was only the second time I had traded this event, so I wasn't totally convinced how the market was going to behave. However, I had a good idea based off last year's event and based off just watching this event over so many years, roughly speaking, what I thought might happen. Which led me on to my plan for this event, and that was to trade with a preference of almost exclusively opening up lay positions first and then back in later at a higher price after a golfer's drift to net a profit. With a field of about 90 golfers in this tournament, only one of them can win, so there's a much bigger incentive in the market for golfers to drift in price rather than steam in. However, this does carry an element of risk because even using small stakes, which is what I'm using, laying selections at high odds on small stakes still gives you an enormous amount of liability. This liability is never really at risk because I'm going to cash out for either a small profit or a small loss either side of the entry point. However, one mistake or one lapse in my psychology, then I know that I could be on for a big loss. So it's important to keep that in mind and avoid making stupid mistakes or holding on to positions for too long. This is gambling at the end of the day, and if you're not careful, you can blow your bank like that. My strategy on day one was essentially to lay an overreaction. If a golfer was to do well on a shot or on a hole, then obviously the price is likely to come in. And I believe that the price was going to come in too much and there was going to be an overreaction where the price would come in and then drift out to a more reasonable price. And oftentimes I believe this would happen before the golfer has even played their next shot. There's also be other times where they've done well on a hole, but they're likely to come up to a more difficult hole or a set of holes. And again, they're more likely to make a mistake here, drop a shot, and then the price also drift back out. You can see in this example on the market overview, the price of Joaquin Niemann came in. After seeing this sudden decrease in price and also watching the live pictures, knowing what has actually happened, I deemed that this movement was too much and that the price was likely to revert back, enabling me to make a quick profit. A similar thing happened here with Louis Oosthuizen. These were the small trades benefiting from golfers drifting. I repeated these over and over again and my profit was increasing with each trade. These small positions on their own weren't generating massive profit on each individual trade. However, I was doing so many of these successfully that it almost felt like it had to be positive in expected value. Again here with Tony Finau, entering at odds of about 65-70 and then cashing out at odds of 110 for a nice profit. And look at the graph there, look at that massive shift in odds, such an overreaction, and I find it easy to profit on this when I was trading this event. Not every single trade that I was doing was winning, of course, and there were some times where I did have to cash out for a small loss. Here, for example, I laid Rory McIlroy at odds of 19, but the price continued to come in. Rory was still playing good shots, even in a difficult part of the course. I could have decided to let the trade continue, but the loss would start to build up if he continued to come in. So it was essential that I was cashing out as soon as it was established that I got the prediction wrong, that the price was going to continue going in the other direction. But importantly, in these types of trades, I was always winning much more than I was losing. And I was being proactive in not letting losing positions run long enough. I was cashing out when things weren't going right. The last significant trade that I did on day one was laying Cameron Smith. Smith was leading at the time and his odds had come in quite short, especially considering that it's still only day one of a very difficult major. My thought process was that Smith had holes 17 and 18 to play, both two quite difficult holes in the context of the course. So there was a possibility that he was going to drop shots there. There was also many people behind Smith who had many more holes to play who could post a score close to Smith's, and in that case, his price is going to drift out as well. And also, if neither of them happened, Smith didn't drop a shot, and everyone else in the field didn't catch up to Smith, then there was still 54 holes left to play over the 3 days where there's a good chance that at some point Smith was likely to mess up and his odds were likely to drift. And this was exactly what happened. Smith ended up double bogeying the 18th hole, and look how much the price moved out. Along with that, other players behind him did score well as well, and Smith ended the day not being the favourite, enabling me to cash out for a nice profit on something which I thought the balance of probability was in my favour. By the time I had finished trading at the end of day one, I had a hedge profit of around £16. A lot of small trades overall led to a pretty nice profit in my opinion, and set me up nicely for trading the rest of the 3 days. On the Friday, it was windy, and wind makes an already difficult course even more difficult to play. Therefore, key sections of the course, which are already difficult, in particular holes 10, 11 and 12, will become even more difficult in the weather conditions, and the probability of a golfer dropping a shot increases even higher on these more difficult holes. This plays very nicely into the way I want to trade this tournament in terms of laying golfers first, because the incentive to lay a golfer when they approach these holes is even higher, because they're more likely to drop a shot and therefore more likely to drift out more and I'll be able to net a higher profit. And that is what I did on this Friday. But before we get to that, I did a trade again on our good old Australian friend. We're back here with Cameron Smith. By the time I had finished trading on Thursday evening to when I looked at the market before the start of play on Friday, Cameron Smith had come back down in price, and he was priced around odds of 6 and 7. And similar to the reasons I laid him when he was leading on day one, I did it again here on day two, laying Cameron Smith, more or less for the same reasons, even though there was more of an incentive now for to lay him because of the weather conditions. With such a long way to go, it was very likely that he was going to drift out at some point. You can see I'd also laid Sung Jae Im. I also believed that his price was too short, and he was another one that I thought was going to drift. Whilst I was capitalising on the drift of Cameron Smith, I was continuing to trade in the same way I traded on day one, in laying overreactions on golfers, to continue building up the overall profit of my overall position. Remember what I said about golfers struggling on holes 10, 11 and 12? This next trade is a brilliant example of benefiting from this very thing. I was able to lay the past champion, Danny Willett, at odds of 23 before he started to play holes 10, 11 and 12. And after a poor performance on these holes, I was able to capitalise by backing Danny Willett at odds of 70, netting a really nice profit there from that very easy trade. On this Friday, Scotty Scheffler gradually became a heavy favourite. By the end of the day, Scotty Scheffler was priced just over evens, but before the end of the day, I was still able to capitalise on this and make a bit of a profit, laying him and then backing him at a higher price. And ultimately, Scotty Scheffler's price becoming so low enabled me to profit on other golfers in the field which drifted as a consequence of him becoming low. The best example I have of this was of Joaquin Niemann. He came very low, towards of around 10. I wasn't able to get in at that price, but I got in between odds of 14 and about 30, I think, on him. And by the end of day two, I was in a very healthy position where I was able to cash out if I wanted to for a profit of around £57. I still had the position open on Niemann, and that minus 600 might look a bit daunting. As I said at the start of the video, that minus 600 is never really at risk. I would always be cashing out way before it ever got to that point. Even when the odds went close to the point where I entered the lay position in, I'd be cashing out there before it even went back into the red. So I was never be going down to a big loss like that. I was always going to be around 57, a bit higher if it continued to drift, or a bit lower than that value if it came back down in price to where I entered at. On day three, the weather conditions wasn't as bad as day two, but still difficult conditions to score in. Unfortunately, my video recording of the screen for day three, the first half of it got corrupted, so I missed some of the trading. That included Joaquin Niemann continuing to drift, so I was able to profit there. Scheffler ended up becoming very short on this day. He ended up becoming odds of about 1.5 at some points, even lower. And I wasn't really sure on the best way of trading this. My inexperience of not trading many golfing events caught up on me here and missed a lot of opportunities which I should have been capitalising on. I was laying Scheffler at the wrong price. I was holding positions out for too long and just not doing anything in the market, wasting time. But it was important that this day occurred because I learned some important things. That even if a golfer is such an heavy odds-on favourite and the price is so short, there's still opportunities to profit because the price is still so volatile, just due to the fact that a golfer can make a mistake at any time. I did continue to trade some of the outsiders, not as much as I would have liked. All in all, I could have been a bit more aggressive on day three, this Saturday here. By the end of the day, I was in an interesting position. If Scotty Scheffler won, the favourite, I would have won £57, and if anyone else would have won, I would have made over £100, and I could have cashed out for just over £70. And my thought process before day 4 was to let this run in play for a little bit longer, hope Scheffler would drift, have some mistakes, or some of the other players would catch him up, and I'd be able to cash out for a value closer to the 100 rather than closer to the 57 mark. On day 4, the weather had improved from days 2 and 3. This was good because it meant that the course would play easier and that scoring opportunities would be easier for the golfers. This increased the chances of a golfer from the pack having a good low score and catching up to Scheffler. Scheffler's price would drift and I would have a bigger profit. And it started really well. Scheffler ended up drifting to over odds of 2.0. However, before I could even capitalise on this and cash out, Scheffler made an unbelievable chip-in from out of nowhere, a miraculous shot. Would have continued on drifting without this amazing shot from out of nowhere, and lo and behold, his odds plummeted right back down to odds of 1.4 in an instant. In hindsight, could he have cashed out earlier when the odds went above 2? Possibly, but it looked like he was continuing to be poor, and it looked like the drift was going to continue. So it's one of them things, sports trading can be highly variable, and in this case, I was on the wrong end of that, and things didn't quite go well. But due to the position I'd accumulated in days 1, 2 and 3, obviously I was in no overall risk in this trade, and it wasn't the end of the world. The hard work had already been done. This was a day of just trying to maximise the profits as much as I possibly could. With Smith so short, I decided to look elsewhere in the field at trading some of the outsiders, using the same principles that I used on days 1, 2 and 3, laying golfers before they played difficult holes. I would say that Rory McIlroy offered the best trading opportunities on Sunday. This is because he's one of the most famous golfers. Most people know where he is, whether they watch golf or don't watch golf, and he attracted a lot of money in the market. He had a really good day and shot a really low score. However, I think people's emotions got in the way of themselves, and all in all, his price was far too short for his actual probability of winning the event, given how big Scheffler's lead actually was. And by this point, Scheffler had already played the most difficult holes on the course. He had a relatively easy run-in with a big lead. McIlroy's price was too short many times in this day, and it enabled me to profit a little bit more than I already had. And by the end of the day, I had a position where if Scheffler won, I would have won just over £90. Anyone else would have won, it would have been way over £100. Scheffler ended up winning, so he had the £90 win. I was very happy about, considering this is only the second golfing event that I've actually traded. I think I really benefited on the fact that I've been watching this tournament every year for the past 12 years now. I know the psychology of how this event works, how the course plays, where people make mistakes. I've seen it over and over again, year after year. That gave me a really big advantage. And the other thing that gave me the advantage was the sports trading software. I was using BetAngel here. I don't think I'd be able to profit nearly as much without this, being able to see the movements in the odds in the market overview so quickly. I'm not affiliated with any type of software. I'd recommend any that have that functionality. This is just the one that I use. If you're interested in my opinions on sports trading software, you can check out this video right here. And I'd like to especially thank my Patreons for supporting the channel and making trading content videos like this possible. It really means a lot that you're supporting the channel, and I'm hoping that you're enjoying the exclusive content that you get over there. Many thanks for watching this video. I hope you've learned something about trading, even if you never plan to do golf trading. I'll see you in the next one.